Procter Gamble, first quarter results hitting the wires just now. Profit came to $1.37 a share. That was 13 cents above estimates. Revenue is also above. Joining us to break down the numbers, Jon Moeller, Chief Operating Officer and Chief Financial Officer at Procter Gamble. And I get better and better at figuring out what's important here, Jon, because we do this every quarter. So you're raising your fiscal year 20 sales guidance. It had been 3 to 4%. Growth. Now it goes to 3 to 5, and you're also raising adjusted earnings per share for the year to 5 to 10% gains. It had been 4 to 9. So I understand both of those are above where you had been previously. So this is better than you were forecasting, and the stock's reflecting it this morning.
Yeah, it all comes on the back of an incredibly strong quarter. It's the fifth quarter in a row with strong volume sales, consumption, and market share gains. Organic sales up 7%. The last 5 quarters, 4, 4, 5, 7, 7. Core earnings per share up 22%. Constant currency core earnings per share up 24%. Free cash flow productivity 91%. Significant increases in both gross and operating margin. Operating margin up 260 basis points. $5 billion in cash returned to shareholders. It's a very strong quarter, and on the back of that quarter, we're raising our estimates, as you said, for both sales, profit, and also cash.
I mean, we had David up here for our Delivering Alpha. You finally found the right guy, I think. I mean, it took a while, right? He kept bringing it laughingly back. It's like he's the only guy in the world that could run this company. Suddenly, I mean, that proof is in the pudding right there. We're looking at a 1-year chart, Jon. What is the main? What has been done differently? Do you think it's almost like, I'm thinking of an ocean liner, but I mean, Procter & Gamble's like, I don't want to say the Titanic, but it's a big, big, big ocean liner to try to turn around, isn't it, globally?
Well, this is really a credit to the 95,000 men and women that I work shoulder to shoulder with every day to continue to delight consumers across the world.
They're
almost
all
all.
Yeah.
And they're executing an integrated strategy that concentrated our portfolio in categories that are daily use, where performance drives brand choice. We've invested significantly in those categories where performance drives brand choice to increase our level of superiority, product, package, communication, go-to-market, value, all funded by significant productivity. We're in the middle of our second 5-year, $10 billion cost takeout, and also enabled by constructive disruption of the entire value chain, from the media supply chain to our own product supply chain, our innovation methodologies. And we just put a new organization structure in place as well on July 1st that's designed to increase focus, accountability, increase speed, trying to move at the speed of the market.
Jon, one of the issues that you and every multinational company is facing is foreign exchange. And I know that was about 2 percentage points that added to from a negative perspective. What do you think about that? Is it a big issue? Do you expect it to continue?
It's been a significant headwind over time. Last fiscal year, which ended in June, the combination of foreign exchange, commodities, tariffs, and transportation costs was a $1.4 billion after-tax headwind. So this year is much more modest. It's still a headwind. We'll have to see what happens in the markets over the balance of the fiscal year. But it's actually less of a headwind this year than it's been historically.
Are you rooting for the Fed to lower rates at this next meeting? Do you think it's warranted based on what you see in the economy?
I'll let the Fed decide whether it's warranted or not. I mean, certainly a compression in the spread between the U.S. yields and yields around the world puts a little bit of pressure downward on the dollar, which is good for large multinational companies which have more than 50% of their operation outside the United States.
Jon, what's the thinking in the company about smaller niche brands and acquisitions there to appeal to younger people? I mean, do you have a free-range, non-GMO kale-based detergent yet? Do you have anything like that? Or I would buy that for sure. With no preservatives. Do you have anything? Are you doing that at all? Do you have these new brands, or are you? Can you sell a millennial Tide? I wouldn't buy it. I mean, if I were a millennial, there's no way I'd buy Tide. My parents use that. You out of your mind?
Actually, our large brands in the U.S., there are 17 of them that are either number one in the marketplace or number two in the marketplace with the millennial consumer. They do have different needs and desires, and those are real, and we need to meet them. Okay. And we do that both with our existing brands, but also small acquisitions and organically developed brands play a role.
Yeah.
What about beauty? That's where you saw a 10% organic sales increase. I mean, that's incredibly impressive. What were the big drivers there?
Beauty, we're performing really across the board. It's the sixth consecutive quarter of strong growth. All portions of the beauty business grew significantly. The skin and personal care business grew in the teens. Our hair care business grew in the mid-single digits. So it's a business that's really hitting on all cylinders.
But I noticed you call out China Olay. That's the only premium brand that I noticed in that. Is that brands that are selling internationally versus what you see in the United States? Is that why you're seeing the big volume?
No, we're seeing it across the board. I mentioned hair care in the U.S. last quarter, we grew 6%. Olay grew in the U.S. as well. But we are seeing higher growth in Asia, particularly in the skincare business, behind both SK-II and Olay.
So how does is technology or the digital revolution helping in terms of like shelf space or inventory or distribution, or are these all the things that take cost out that you were talking about with the 5-year plans, or has that been, are you successful there as well? Is that make a difference for the results?
Digital technology makes a huge difference, and it's being integrated into everything we do. It's a contributor to the top line. It's integral to innovation. As you mentioned, it aids productivity. It's something that we're bringing to bear across the spectrum of value creation. And it's one of the elements that I referred to indirectly when I talked about constructive disruption. There are new possibilities available, certainly in the marketing area, but also in the production area and the office environment where we're bringing digital technology to bear.
So would you say that a couple of years ago, did we get out in front of ourselves in terms of the big established companies thinking that they needed to, you can't be Kraft macaroni and cheese, you need to be whatever that is, Annie, I don't even know, what's it called, Annie's?
Annie's or Aunt Annie's or.
Did we get ahead of ourselves? Is size still good? Does some of the best known brands in the world are at Procter Gamble. Would you say the pendulum has swung back a little in terms of what's in favor, John?
I would say that as the entire ecosystem system is evolving, it benefits large brands. Think about e-commerce as an example. Very few e-commerce shoppers go to the third or fourth page of a search, and what shows up on that first page, and what determines what shows up on that first page. There's revenue to e-tailer, which big brands deliver. There's depth of ratings, so not just the average numerical rating, but the number of 4 or 5 ratings. And certainly big brands can compete in that context. And so we're finding that big brands are extremely resilient in the environment that we're in, and the ecosystem's moving in a direction that will continue to favor them. At the same time, as I said earlier, there is a very real and important role for small brands, and we're about both.
Hey, John, you mentioned that the biggest growth is coming outside the United States. So what does that mean when you've got the China trade talks that are taking place, Brexit, potential for other tariffs that could come to the EU and other places? Has that impacted the company at all?
Brexit and its impact on consumer confidence definitely has had an impact, but we're still growing. We grew 2% in the UK in the quarter that we just completed. China was one of our best quarters in a long time, grew 13%. That's on the back of 10% last fiscal year, 12% last quarter, now 13%. And in our industry, it's really about, particularly in these categories where performance drives brand choice, superiority of offering, delight of consumer. If we do that job well, we generally fare well, and when we don't, we have issues.
So when I saw David at Delivering Alpha, David Taylor, I asked him, I go, I really wish you'd come on Squawk Box. And he goes, I'm not nearly as good on TV as Jon Moeller, and he's going to be the one who keeps coming on. So I don't know what they...
And we agreed, by the way.
And we agreed. I don't know what they pay you, but I'm sure there's a big disparity between CEO and CFO. And, I mean, if he can't...
You're saying the CFO is getting paid more?
Maybe you should be, is what I'm saying. And I don't know if you've spoken to him about this, but he did. He deferred to you. He goes, no, I can't do what Mueller does. So just so you know, next time you're talking contracts.
Appreciate the scoop. That's helpful.
Okay. Thank you again, and we hope to see you again.
I was working for you.
Yeah. I hope when I can. We'll see you again soon. Hopefully, John. Thanks.